The top. Jigar Mistry is with us, co-founder Buoyant Capital. Jigar, good afternoon. Good to have you here. I mean, you can get the theme right and the stock wrong, I don't know. I mean, maybe it's the wrong paraphrasing of the situation in this one. But what's your sense? I mean, with something like this.
Yep, Prashant, we used to often say the operation is successful, but the patient is no more. Not obviously in this context, but sorry, we don't really track this stock or own it for that matter. So no views on the stock per se.
What have you been doing, Jigar? Give us a flavor, a micro flavor, not a top-down, but a bottom-up flavor of where you've been active, what you've been doing, what has Buoyant been doing?
So largely we are a top-down fund, Prashant. So a large part of what we do stems from how we see things from a top-down perspective. But over the past, I would say 3 odd months, we have increased some exposure to small cap, which in November was, at the absolute low since the inception of our fund in 2016. So obviously the corrections we have used a little bit to dial some risk up. The way we see things, frankly, there were two broad issues, right? One, the rupee was not helping, which was a circular loop because the more FII sold, the more rupee worsened, and the more rupee worsened, the returns when denominated in their home currency became even worse, and then they sold more. So hopefully the deals put a stop to that. Rupee sort of improved a little bit. It was oversold, but again, it's sort of inching closer to those highs again. The other part is that the phenomenal wealth transfer that has happened. We counted it to almost close to 6 lakh crores, which is 1.7% of GDP. And from that standpoint, people were waiting and are still waiting, I guess, as to when that starts showing up in the listed equities volume growth numbers, right? Because on the one hand, the capex from state and center has slowed down. The money has been given in the hands of people. And if they are not spending either, which is sort of what is apparent from 3Q numbers, which is all single digit growth, then people have started wondering on where this is essentially going. So I think once the market solves that conundrum, and I think 4Q can be a reasonably good guide when the volume growth returns back, then I think we'll move out of this very tight range where, like a action-packed week is then followed by a very mundane one.
Okay, all right. Hi, Jigar. Good afternoon. Good to see you in. Jigar, give one stock. One stock with due disclosures. Something new that you'll have got into or something that you'll had that you'll have topped up. All disclosures, regulators will be happy to hear as well.
No, Nigel. So frankly, all that I would want to. Stocks is something we don't really discuss about. Themes, obviously, we can talk now. Themes, clearly, the one big theme getting into this was the fact that commodities became a very large sort of play for us in between. But we have substantially pruned down exposure there sort of over the last month or so.
Commodities, so ferrous and non-ferrous, you'll have taken some money off the table is what you're telling me.
Yes, substantially taken it over, lowered the exposure there.
The conglomerate, which is a tricky one, on that one as well, that worked very well. I recall you were telling us that you'll have exposure to this commodity play, which has exposure to a lot of commodities. That only can be Vedanta. Mr. Agarwal has done things in the past that sometimes give investors nightmares. But this time around, it's made plenty of money. So you'll have taken money off the table from there as well?
So see, essentially, continues to remain an anti-dollar play, right? But at the end of things, Nigel, the fact is that if you look at the price in which gold and silver sort of oscillated, that essentially is a very big move from a behavioral standpoint. Now, fundamentally, you can't put a number to what that fair value of a gold and silver is, right? Copper, you have a cost curve, you have demand supply. You have some fair value where, say, 70-80% of the production cost curve will make money, and you can create a long-term picture there. With precious metals, parabolic moves, make them less as a store of value, increases anxiety. So once that starts happening, you are finally feeding it into a belief system where, stocks start reflecting spot prices. And when that happens, that has traditionally been a source for us to reduce exposures there.
Okay, all right. By the way, the T20 World Cup is on and it's quite interesting. South Africa and Afghanistan, they played out. They tied 187 each. You had a super over, and both of them scored 17 runs each. So now we're having another super over at play. Just thought we'll update our viewers on that front as well. Interesting times with regard to the T20 World Cup. Jigar, what about this India-US trade deal that's been announced? Any opportunity? Textiles has rallied, but they've come out drastically from the top. Now you have a bit of a worry with regard to what's going on in Bangladesh. They as well managed to get a deal going. Textiles, chemicals, auto ancillaries, some of them could be potential beneficiaries. Some theme you'll have picked out from this deal?
One big sort of theme, Nigel, is basically how that, as we discussed, how that stems the fall of rupee. Now, over the past, I would say a year, a little more than a year, rupee has depreciated against a depreciating dollar. So that is sort of very tricky situation for a country to be in. And if that stems, then I think that's a big win out of the situation. With regards to specific, we used to export like 2% of GDP, 1% of that was impacted. And therefore, from a GDP standpoint, it was not such a big deal really. But what it does to a few micro industries, textiles, gems and jewelry, carpets, it's a big deal for a few of those sectors. Our understanding of what happens with Bangladesh still is that eventually, they might have to get into the US sort of cotton and yarns for them to effectively get a lower import duty. But when you adjust it for the fact that the prices are a lot more expensive than India, plus there is logistics involved, the net benefit essentially is not that large. So we don't really own a lot of textiles or gems and jewelry or carpet, but I don't really see that big of a challenge for the Indian counterparts should somebody be holding.
Got it. Okay. All right. Thanks a lot, Jigar, for joining in and giving us your view. We look forward to chatting up with you rather soon. Well, the markets have taken a bit of a leg up.